Now guys, this is the agenda of this S&P 500 weekly technical analysis. At first, I will do the S&P 500 technical analysis on the weekly chart. Then I will discuss the impact of the Fed chairman's comment on the overall stock market and the index. Index means the S&P 500, Dow Jones, Nasdaq, and all other indices in the coming week and the month. So what will be the impact on the overall stock market in the coming week and in the month of September? Then I will tell you the support and resistance levels for the S&P 500. Then I will do the SP500 technical analysis on the daily chart. Then I will give you the probable movement of the SP500 in the coming week. That is from August 29th to 2nd of September. So first I am going to begin with the S&P 500 technical analysis on the weekly chart. Guys, this is the weekly chart. Let me write it down. This is the weekly chart. Weekly chart means one candle represents 1 week. Now first comes the interpretation of the candle itself. Because this is a very heavy bear candle and the closing of the candle is the low of the candle, this means that there are very heavy bearish sentiments in the market, in the S&P 500, in the stock market. What it means that on Monday we can anticipate a gap down open in the S&P 500. Okay, and upon the gap down open we can anticipate a fall. Now this is not yet confirmed that there will be a gap down open or there will be a fall. So we need to look into the daily chart. So once we look into the daily chart, and if the daily chart also says that there will be a gap down open and then immediately there will be a fall, then definitely there will be a very heavy probability that on Monday there will be a gap down open, and upon gap down open it will fall. So we will see to that on the daily chart of the S&P 500. So this is the interpretation of the candle. Simple bearish candle, very heavy bearish candle, and very heavy, bearish sentiments. So this is the first thing. Now let's talk about the technical indicators. So when we talk about the technical indicators, first comes the Bollinger Bands. Last week we were talking about the upper band. Now we are talking about the lower band. Lower band, median of the Bollinger Band, because the S&P 500 has closed in between the lower band of the Bollinger Band and between the in between the lower band of the Bollinger Band and the median of the Bollinger Band. This means that SP500 is bearish through the Bollinger Bands on the weekly chart, right? Now comes the second part. The second thing is the moving averages. There is a clear fan out in the moving averages. This is supporting a bear trend, and this is supporting the bear trend from the week of February 14th. Okay, so there is the bearish trend from the week of February 14th. Okay, so the bearish trend is still there, okay, through the moving averages. Now other than that, what was the problem last week? So the last week the problem was that the candles were closing above all of the moving averages, making the moving averages neutral. But this time, because of this one heavy candle, in the case of SP500, because in case of SP500 on the weekly chart, this heavy candle, it has closed below all of the moving averages. Through the moving averages, the S&P 500 is clearly bearish on the weekly chart, right? Then comes the Ichimoku. Now if you look into the Ichimoku, because the S&P 500 is trading below the Ichimoku cloud, it is trading below and it has closed below the Ichimoku. This means the S&P 500 is bearish through the Ichimoku, right? So we have seen that the S&P 500 on the weekly chart is bearish through the Ichimoku, through the moving averages, and through the Bollinger Bands. Now let's see what other technical indicators are saying. First comes the MACD. If you look into the MACD, the MACD is more than the signal. This means that directionally it is bullish, but because both MACD and the signal are negative, the values are negative. This means that on the broader scale, means when we talk about the big picture, it is bearish. As of now, it is directionally bullish. Okay, so as of now, MACD is more than the signal and it is directionally bullish, but otherwise it is bearish. Okay, because both the MACD and the signal are negative, right? Now comes the stochastic RSI. Stochastic RSI, because the K channel is less than the D channel, K channel is approximately 87, the D channel is 95. This means that directionally the stochastic RSI is bearish, but because the D channel is more than 90, okay, so we need to wait for one more candle to see absolute bearish. But as of now, it is bearish. Simple, it is bearish. Divergence in the closing prices of the candles, in case of the S&P 500, it is normal. Volatility is 182, 183, and it is approximately 95% of the all-time high level. In case of this, the SP 500. So this means that still the SP 500 is heavily volatile on the weekly chart. So now what we have seen is that all of the technical indicators are clearly supporting or clearly saying that the S&P 500 on the weekly chart is bearish, except the MACD. But the MACD is still means MACD is directionally bullish, but both MACD and the signal are negative. This means that on the broader scale it is bearish. So as of now, what we will say, that the SP 500 is bearish on the weekly chart, and it is weak bearish. It is bearish, but it is weak bearish. So until and unless the MACD becomes bearish, we will not say that it is heavily bearish. We will say that it is bearish, no doubt it is bearish, but it is weak bearish, means the S&P 500 is weak bearish on the weekly chart. Now let's move on to the daily chart of the S&P 500 to see what is going to happen in the S&P 500 on the daily chart, or what is happening on the daily chart, okay, and what the daily candles are saying, and whether we are going to see a gap down open on Monday and immediately upon gap down open there will be a fall in the S&P 500 or not. So this will be clear on the daily chart. Yeah. So before that, the daily chart, I told you that we will discuss the impact of the Fed chairman's comment on the stock market and overall the stock market and the S&P 500, the Dow Jones, Nasdaq in the coming week and in the month of September. So now let's first discuss the comments of the Fed chairman and the impact of those comments, okay, in the overall stock market, and then we will do the daily analysis. Then we will do the technical analysis on the daily chart of the S&P 500. So guys, now we are going to discuss the impact of the comments from the Fed chairman on the overall stock market, the S&P 500, Dow Jones and the Nasdaq. So yesterday, immediately after the comments of the Fed chairman, means immediately after the press conference, I have updated my YouTube community members that this is what he has said and this is what is the meaning of his comments and what is and what we are going to expect. So the Fed chairman, okay, he was more hawkish, okay, and he went harsh on bulls because he had no other choice. Because if he would have gone short on the bulls, then definitely we would have seen a very heavy bullish movement, and then overall stock market would have entered into the bubble, and then that would be definitely very, very bad for the economy, because the bubble was supposed to burst around Christmas, okay, or in January itself. So that will be a very critical, or that will be a very bad situation for the stock market, for the economy itself. Okay, so the Fed chairman, he was more hawkish, and he said that he and his office will do everything to curb the inflation down to 2%, but it will take some time. Now the 2% is the standard acceptable inflation rate maximum. And what is the current inflation rate? It is 8.6%. The current inflation is 8.5%. 8.5%. Okay. So this 8.5% is more than 4 times of the acceptable 2% that the Fed chairman has mentioned. Now, the Fed chairman has said that because of this action, what action? Okay, means the action is to increase the interest rates. Because of this action, to curb down the inflation, the economy will slow down. Economy will slow down means the recession. Now the recession is again into the picture. See, recession it was always there. But when we have seen this the fake rally in the stock market, this the fake rally after his comments on this that July 27, there was this the fake rally. So everyone was thinking that now there is no point of recession. No, this was the fake rally and it was supposed to happen. Okay, it was supposed to come down this way. So the recession was always the recession was it was always there. Now he said that because of the action of the Feds, because of the action of the central bank, the economy will slow down, the recession. Okay, but there is no other way to solve the problem before it becomes too big to handle. Okay, just like we have seen in 1977, 1980, okay, 45 years ago. So the Fed chairman has said that the rate cuts or the pause in the rate hikes, okay, it will be there only after the inflation has come down significantly in the year 2023. This means that, okay, this is August 2022, then we have September, then we have October, November and December. This means that in the next 4 months there is not going to be any relief. Whatever relief will be there, it will be there in the month of, or sorry, it will be there in 2023, whether it will be there in the month of January, February or March. Okay, so we are not sure, but the relief will not be there at least for next 4 months. Okay, now he said many other things, but he was clear that Feds are not going to wait and watch. Rather, they are going to take action against the high inflation, and that the action will result in the recession, for which the individuals and businesses must prepare themselves. So he has said that the individuals and the businesses must be ready to take some pain. So he has used a word, and the word was pain. P-A-I-N. So he has said that the individuals and the businesses must be ready to take some pain. And what he means with this, the pain, that we are going to enter into the recession and economy will slow down. Everything will be impacted. The jobs, the businesses, the loans, because the Feds are going to raise the interest rate. Yeah. So let me once again, okay, for the people who have recently subscribed to this channel and who are watching this technical analysis for the very first time. So let me tell them that why the increase in the interest rates, okay, it slow down the economy and it brings the economy, okay, into the recession. The reason is, whenever the central bank, whenever the Federal Reserve raise the interest rates, then banks are compelled, banks are forced to raise the interest rates on the loans. Okay, now in this the 21st century, whether it's the individuals or the businesses, everyone is dependent on the banks. Banks are the backbone of the economy. Now earlier you were paying only like 0.5% or just 1%, okay, for your home loan. So your home loan was at just 1%. Now because the central bank is going to raise the interest rates, then the banks will be compelled to raise the interest rates, and the central bank is saying that, I mean the Fed chairman is saying that he will go for 3.5% or 4%, 3.5% to 4%. What it means? It means that earlier you were paying 1% interest rates for your home loan. Now you will be paying 4% or 3%, sorry, 4% interest rates, okay, on your home loan. Now 1% to 4%, this is a very heavy interest rate. Okay, the similar thing we can expect to see in the credit cards. If you own, okay, most likely you will be owning one or more than one credit cards, or vehicle loan, or your car loan, or any other form of loan, or if there is a business loan, any form of loan is going to get costlier. Okay, so in this example, 1% to 4% or 1% to 3%, okay, it will be costlier. Now the problem is not that the loans are getting costlier. The problem is that when the loans will be costlier, the people will be reluctant to take a loan. People will not buy any new house until everything cools down, means after this the recession. People will not go for the expensive the loans, okay, home loans or the car loans or any other expensive loans. Okay, means people will spend only and only on the essential items that are required. Secondly, even if people want to take a loan, they will be forced to not to take the loan. The reason is people are going to lose the jobs. Okay, that is something, the means that is the reality of the coming time. Okay, means whatever, means this thing is what we are going to see in the near future. People are going to lose the jobs. People will be insecure about the jobs. Even if they want to spend the money, they are not going to spend the money. When people will not spend the money, okay, because see, businesses will come into the picture. And businesses, most of the businesses or all of the businesses, mostly they rely on the banks. They go to the banks and they take the loans, because banks will raise the because the banks will raise the interest rates heavily. This means that the businesses will try to avoid going to the banks and taking the loans on the very heavy interest rates. This means that the businesses must keep an eye on their expenses. They must save the money. And how the businesses can save the money? By firing the employees. They will fire the employees. They will not place any new order. Nothing. Means the businesses and the people, they will spend less. Okay, when they will spend less, then the companies that are selling their products and the services to the individuals, to the businesses, then the companies will see revenue loss. Companies will see revenue loss, because people are not spending, businesses are not spending, no one is buying any unnecessary thing. Okay, they're not buying, means as they were supposed to. Companies will see revenue loss. When there will be the revenue loss, there will be the loss in each and everything, and this loss will be reflected in the balance sheet of the company, and in the profit and loss statement of the company. Now, because the company is listed in the stock market, the company might be a part of the S&P 500, Dow Jones, Nasdaq, or any other index. Okay, so because the company is listed in the stock market, and the company's balance sheet and the profit and loss statements are affected, means negative losses, then what will happen? The valuation of the company will decrease. As of now, there is a company, so let's say, okay, in an example, that there is a company and the valuation of the company is $100 billion. Now that valuation will come down to, like, let's say $50 billion. Okay, that will be the valuation, $50 billion. As of now, the stock price of the company is $100. Okay, when the valuation will decrease to 50 billion, then the stock price will be $50 only. Okay, now because the company is a part of the S&P 500, the Dow Jones, the Nasdaq. Okay, because the valuation of the company has decreased, the valuation of the Nasdaq, the valuation of the Dow Jones, the valuation of the S&P 500 will also decrease. Means as of now, if the S&P 500 is trading around 4,000, approximately 4,000, when everything decreases, then the S&P 500 will see 3,500, 3,000 or so. So guys, this is the cycle. Okay, now I hope you understand the raise in the interest rates and why there is a fear in the stock market, etc. So we were talking about this, the comment of this, the Fed chairman. Okay, so pain will be there, individuals and businesses. The only market supportive thing that he has mentioned, means the Fed chairman, he has mentioned that the central bank will definitely cut the rates as soon as some significant improvement is seen. But that significant improvement will be seen in 2023, not immediate. Okay. Now, secondly, he said that Feds will go for 3.5% to 3.7% maximum by the end of 2023. Okay. This means that as of now, if you look into the picture, there is the 2.25% current interest rate. Okay, it is 2.25%, and Feds are saying they will go for 3.5% or 3.75% by the end of 2023. Okay, this means 1.25% to 1.5%, maximum 1.5% they are planning for, maximum 1.5%. Now this means that we have September, we have October, we have November, we have December. I think there won't be any rate hike in the month of November. Okay, I need to check. So let's say there are only 3 months, okay, where the Feds are going to raise the interest rate. So what the Feds can do, they can go for 50, 50, 50, okay, or they can go for 75, then 50 and 50. Okay, then it will be 1.75. Okay, so this is what the Feds can do. Okay, so he has said that they will go for 3.5 to 3.75%, but I believe that they can means the Fed chairman, okay, means the Federal Reserve Central Bank can it can go for 4%, okay, approximately 4% by the end of 2023. This means there is not going to be any form of relief, any kind of relief to the stock market, to the companies, to the individual, to the businesses, at least until the end of 2023. And if you are an individual or a business, then be ready to pay higher interest rates on the loans that you have taken. Then I have mentioned, okay, this was the general comment for my members. So I told them that if you have booked the profit, so that is good. Now what we have discussed is that number one, Feds are hawkish. Feds are hawkish, means bearish. Number two, there is going to be no relief of any kind until the end of 2023. Okay. Number three, that the Feds are going to raise the interest rates by 3.5%, 3.75%, or approximately 4%. Okay, by the end of 2023. So approximately 4% raise in the interest rates by the end of 2023. Number four, that because there is going to be no relief by the end of 2023, the end of 2022. Okay, end of 2022. So because there is going to be no relief by the end of 2022, this means this whole year we will be bearish. We have to be bearish. Okay, because the sentiments will be bearish, the company's balance sheet, revenue, each and everything will be bearish. Or you can say that by the January 2023, because the companies will post their earnings, okay, in the month of October. Okay, then the next quarter, then they will post their earnings in the month of January. So there is going to be no relief until January 2023, and we will be bearish until January 2023. When I say bearish, I do not mean that every day you will see red candles. No. And I also do not mean that every day you will see that the market is coming down, that the S&P 500 is coming down. No. Overall, so what will happen? Intermittently there will be the bulls, there will be the bull candles. Market, S&P 500, Dow Jones, Nasdaq, everything will come down momentarily. Okay, you will see, okay, this a retrace, then a fall, then a retrace, then a fall. So all of these retraces will help you to enter into the S&P 500. Okay, to be bearish, to short, or to buy put option. So this will act as the lower high. Okay. So if you have subscribed to the channel, then it's good, because I'll be giving you the weekly technical analysis, and accordingly you can plan your trades. And if you're the member of my YouTube community, then you need not to worry. Okay, I will give you the daily analysis, and on the daily basis I will tell you that on what particular day lower high is going to form, and at what level the lower high is going to form. Okay, so that you can maximize your profits. Okay, so these are the things. Okay, and number five is that we are going to see a recession. So these are the things that we can conclude based on the comments, okay, from the Fed chairman. Now guys, let me give you the support and resistance levels for the S&P 500, so that you can plan your trades accordingly. And after the support and resistance levels, then I will do the S&P 500 technical analysis on the daily chart. Now guys, let's talk about the support and resistance levels for the S&P 500. Now we have 4291, 4291. 4291 is going to act as again the major resistance, but as of now, okay, not just for the coming week, but for the month of September, I'm not expecting the S&P 500 to breach the 4291. So not the 4291, but the zone of 4291. or you can say that the month of September or October. Okay, so as of now there are very less chances that the S&P 500 will see any reversal that will be able to breach the 4291, because the breach of 4291 means the S&P 500 will be bullish. Okay, and as I've told you, okay, in this and as I've told you, based on this, the Fed chairman's comment that by the end of 2022, market will means the stock market and the indices like S&P 500, Dow Jones, Nasdaq will remain bearish. So as of now, we are not anticipating any breach of 4291. Okay, so 4291 will act as a very heavy resistance and is the final resistance. Okay. Now then comes the next resistance. Okay, it is at 4265. Again, I'm not anticipating any retrace up to 4265 in the coming week. Then 4237, no, again not 4237. So I'm still not anticipating any reversal to 4237 in the coming week. Then comes 4207 or 4210. Yes, there can be a reversal. So if there comes a reversal, then yes, we can see that reversal up to a maximum of 4207 or 4210. Okay, then comes 4185, again a very strong resistance. 4185 is our calculated resistance as well as the 200-day moving average. Okay, so this is going to act as very strong resistance. Any upward movement will be restricted by 4185 in simple words. Then we have next resistance at 4150, approximately 4150. Then we have a next resistance or immediate resistance at 4110. Okay. Then we have the next very immediate resistance at 4065, because the closing is at 4057. Okay. So these are the resistance levels. Now comes the support. So the support comes at 4035. So last week it failed to hit the 4035. It came to 4057, but it failed to hit the 4035. But next week definitely it is going to hit the 4035, and then it is expected to come down. Okay. Now after 4035, then comes the support at 3990. This support is at 3990. Then the next support, a very good support, comes at 3938 or 3935, because historically we have seen that there was a very heavy support or resistance, okay, at this particular level at 3937. This means that 3938 or 3937 is going to act as very good support for the S&P 500. This means that when on Monday, when this the S&P 500 it comes down further, then we will see that it is hitting the 4035 and it will be able to breach. Means it can breach 4035. Next support will be at 3990. Okay, and then from 3990 we can see a reversal. But if for some reason, okay, see, sentiments are heavily bearish. Okay, so a breach of 3990, okay, it will be normal. If there comes a breach of 3990, then finally it will find support at 3938, and from the 3938 it has to take a reversal. Okay, so that is with the 3938. Then comes the next support for the SP500, that is 3884. Last time also it has been, okay, a good support and good resistance for the S&P 500. So again 3884 will be a good support or resistance for the S&P 500. Sorry, not resistance but a good support. Then comes the next one at 3840. 3840, again proven support, very good support. Then finally 3790. Okay, not below 3. So 3790. So I'm not anticipating a fall, okay, below 3790 in the coming week. So we will say that from 3790 to 4291, not 4291, 4185, or we can say 3840 to 4185. So a fall from this level, okay, means in the next week where we can anticipate a fall of 5.3%. 5.3%. So this will be a good fall, and this will be enough for the S&P 500 in the coming week. So a fall up to 5.2%, or when we talk about this, the 3790, then this will be 6.5%. So we can anticipate a fall. Sorry. So we can anticipate a fall from 5.2%, 5.25% to 6.25% in the coming week. Okay. So this will be the maximum fall in the S&P 500 in the coming week. Okay, but intermittently, okay, like on Wednesday or so, okay, or Tuesday or Wednesday, we can see a reversal. So accordingly, we will have to recalculate, okay, the fall based on the reversal. So if you are my community member, if you are my YouTube community member, okay, if you have joined my YouTube community, then you need not to worry. I will tell you what is happening on the daily basis. Okay, what will be the approximately retrace, okay, 1%, 2%, 1.25%, and what will be the fall thereafter, okay, 2% or 3.35% or that particular percent. So I will give you the daily analysis of the S&P 500. And guys, if you have not yet joined my YouTube community, then I have given the link in the comment section and in the description, so you can use that link to join my YouTube community. So guys, these are the support and resistance levels for the S&P 500 from 3840 to 4185, and in one exceptional case to 3790. Okay, and a support at 4035 will be good, and once it comes down and it takes a retrace, then that retrace will be limited to 4035. So 3840 to 4185, and then we have a median at 4035. So these are the support and resistance levels for the S&P 500. Now guys, let's do the technical analysis, means the SP500 technical analysis on the daily chart to see what is most likely going to happen on Monday. Okay, that will be August 29th, and then for the rest of the days, Tuesday, Wednesday, Thursday, and Friday. Friday will be 2nd of September. Now guys, we are here on the daily chart of the S&P 500. So guys, before I do the technical analysis of the S&P 500, I have this information to share. Now if you want to join my YouTube community, okay, the YouTube membership, in that case you need to visit the link that I provided in the description and also in the comment section. All you need to do is to click on the join button. Now once you click on the join button, then this pop-up will open. This pop-up will give you two options: only one midweek update per week or all midweek updates. So whichever you want to join, you can join. So if you want to, because most of my members, they have joined for this, they have opted for the all midweek update. This is where you can see that most of my members, or almost all of my members, they have joined this, the all midweek updates. So there are many members who have joined my YouTube membership, and they have opted for the all midweek updates. So guys, whenever you want to join, just click the link provided in the description and also in the comment section. Now guys, let's first do the S&P 500 technical analysis on this daily chart, and then we will deduce the probable movement of the S&P 500 in the coming week. So for this technical analysis, number one thing is this is the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band and the median of the Bollinger Band, this means through Bollinger Bands, S&P 500 is bearish. Then comes the moving averages. Now, the pattern of the moving averages is saying it is bullish. It is bullish. But because the S&P 500 has closed below all of the moving averages, it is saying it is bearish. Pattern is saying bullish, closing is saying bearish. This means the moving averages are neutral, right? Other than that, whenever, see, most of the times we look into the closing. So as of now, you can say it is neutral, but we can count it as bearish. Okay, because see, sooner we are going to see a crossover in the moving averages. In the next week itself, we can expect a crossover in the moving averages. Not a big deal. Okay. Then comes the Ichimoku cloud. Now, Ichimoku cloud is the only problem for the SP500, because SP500 is bullish through the Ichimoku cloud, as the SP500 is moving or is trading above the Ichimoku cloud. Okay. Now, let's see what other technical indicators are saying. Technical indicators, MACD is clearly bearish. It is directionally, it is bearish. It is bearish. Okay. Because the MACD is less than the signal. Then comes the stochastic RSI. Again, stochastic RSI is bearish because see, K channel is marginally up. marginally more than the D channel, but because both K and D are less than 20, it is bearish. Okay. And last week, if you have seen my technical analysis, then I told you, because the channels are going to, because we are expecting a crossover in the MACD on Monday, and once there is a crossover in the MACD, then in the entire week, okay, it will be bearish. Any retrace will be an opportunity, and be ready to see a heavy fall. On Monday, there was a bear candle and there was a successful crossover in the MACD, and then it became bearish. This was the opportunity to enter and then the fall. Okay, so as of now, MACD is bearish, stochastic RSI is bearish, the divergence in the closing prices of the candles is normal. Volatility is normal on the daily chart. It is not heavy. So what we can say is that on the daily chart, through all of the technical indicators, on the daily chart, through all of the technical indicators, S&P 500 is bearish, but it is weak bearish. Why I am saying weak bearish? All of the technical indicators are supporting the bearish trend, but the pattern of the moving averages is bullish. Secondly, Ichimoku is bullish. Okay, this is why I'm saying that it is bearish, okay, but it is weak bearish. Now it will be more bearish, or it will be strongly bearish as soon as we see a crossover in the moving averages, and we can see this the crossover in next or by Tuesday or Wednesday. Okay, we'll be able to see a confirmed crossover in the moving averages. Not a big deal. Okay, as of now it is bearish, but it is weak bearish. And when I say weak bearish, it means that whenever the S&P 500 comes down, it will be having chances to see a retrace. Okay, and by the time it retraces, there will be a crossover in the moving averages, and then there will be some good fall again, and then it will be able to breach the Ichimoku, and it will be confirmed 100% bearish. Okay, so this is what we have seen technically. So technically, S&P 500 on the daily chart is bearish. Now guys, let's deduce the probable movement of the S&P 500 in the coming week, like what is going to happen on Monday, Tuesday, Wednesday, Thursday and Friday, etc. So guys, once again, if you are not subscribed to this channel, then please subscribe the channel and click on the bell notification icon so that you can get the weekly technical analysis that I post every Saturday. And if you want to join my YouTube membership, and if you want to join my YouTube community, then I've given the link in the description and also in the comment section, and you are welcome to join. Now guys, let's deduce the probable movement of the S&P 500. First of all, let me tell you a few things. Number one, last week I told you that there is a zone. Last week I told you that until and unless S&P 500, until and unless you see the breach and the closing of the S&P 500, either this side or this side, the movement of the S&P 500 will be limited to this particular zone, and that was the reason the movement was limited for 3 days. Okay, particularly for these 2 days. Okay, now you might ask a question that there was a clear breach and there was a clear closing on 25th of August. Okay, that means the closing above the zone. Then why it was not bullish? The reason why it was not bullish, because this was a fake run. This was a manipulated bullish run. This was a fake run. This was a trap. And that was the reason I told my members that you are seeing some good bullish movement in last final hour, in last 30 minutes in the stock market, but I am still firm on my point, and my point is bearish. Go bearish. Now you can again ask one more question, that because there was a very heavy movement, is that movement not manipulated? Is it not fake? It is not a trap. No, absolutely not. This is not a manipulated movement. This is not a fake movement, and this is not a trap. Now because the S&P 500 has breached the zone, this particularly previous consolidated zone, this means it is bearish and it is going to come down. Okay, now on Monday, because if you see the candle that was formed on this Friday, August 26th. Okay, So if you see this particular candle on August 26th, then what you will notice that the closing is the low. Okay, the same we have seen on the weekly chart. Secondly, this is a very heavy candle that has engulfed the previous candle or the candles. 4 candles. This one candle has engulfed the previous 4 candles. This means on Monday we are going to see a gap down open. A gap down open. Gap down open. Secondly, immediately upon gap down, the S&P 500 will fall. These two things are almost clear. Okay, now there comes the second thing. Irrespective of the open, I repeat, irrespective of the open, the S&P 500 will come down. First, it will come down. Okay, intraday we can see a reversal. That's a different thing that we will talk about later. But as of now, number one, on Monday, on August 29, there will be a gap down open. Secondly, upon gap down open, it will come down. First, other than that, irrespective of the open, the S&P 500, it will come down on Monday. Simple. Okay. Now this thing is clear on Monday. Now whenever the S&P 500 it comes down, it will find support at 4035. Now as of now, what I can see is that it can be easily able to breach, or it should be easily able to breach the 4035. Then it will come down to 3990. Okay. Now 3990 is going to act as a good support for the S&P 500. Now we will have to see whether the S&P 500 is holding at 3990 or not. If it is holding at 3990, then we can expect a reversal, or for the entire day it will give you a dead movement, a dull movement around 3990, just a bit up down, nothing else. Okay, now whenever it will see a reversal, that reversal will be confined to 4035. If it is able to breach the 4035, then it will be able to move up, and then the next resistance will be at 4065. But because 4065 it is not a very strong resistance, so we can see the next resistance, a very good resistance at 4110. Okay, it can move up, and then again from 4110 or 4065, then again it can fall. Okay, now this fall we can see intraday, or we can see this fall on Tuesday. Yes, on Monday we can see a red candle. On Tuesday we can see another red candle. So we can see multiple red candles. Okay, until and unless it comes down to this particular level, to 3840 or to 3790. So yes, so there are chances that we can see back-to-back red candles up to 3790, but thereafter it will have to give a reversal. Okay, so that is the second scenario. That is the second scenario when it is coming down, okay, on the daily basis, and then it is hitting the 3840 or 3790, and then it is giving the reversal, because it will have to. Okay. Now the first scenario that we are talking about is that first it will come down, it will find support at 4035, it will breach, then it will come down to 3990, and at 3990 it is expected to get some good support. Now there are chances that because there are very heavy sentiments, very heavy bear sentiments, it can even breach 3990 and can come down to 3935. Now that's it. So 3935 will be good. Okay, so 3935 will be good support for the S&P 500. After hitting the 3937, okay, 3940, then it will see a reversal. In that case, the 4035 will act as a strong resistance, and then the chances of seeing a reversal up to 4110, okay, it will be very less. In that case, 4035 will act as a very strong resistance. Now if there comes a reversal on Monday, intraday reversal, then that will be good. See, an intraday reversal, or what we can say, a doji kind of candle, or a small bearish candle, or a small bullish candle, means this kind of candle, okay, intraday on Monday, it will be supportive of the bears. Means if this candle is formed, then we can say, okay, on Tuesday the S&P 500 it will further come down. Okay, but if this candle is not formed, and if there comes a very heavy bear candle, then again we will have to see whether it is defying the technicals or not. And if it is defying the technicals, then on Wednesday we will see a very heavy reversal, not just a small reversal, but a heavy reversal on Wednesday. Okay, provided it is defying the technicals. But if this kind of candle is formed on Monday, okay, that it came down heavily, then there was a reversal, just a bit up, and then finally it formed a small red candle or a green candle. Okay, so that means that on Tuesday we will see this red candle. Okay, again, I mean, as of now I cannot say that there will be a heavy candle, okay, or a small candle, but there will be a bear candle or there will be a downward movement on Tuesday. Okay, that also means that on Wednesday we will see a downward movement further. So down, 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 and so. Okay, now the day it will hit this, the boundary of the Ichimoku. This is the boundary of the Ichimoku. The day it will hit the boundary of the Ichimoku, then only, or then we can say, then there will be very heavy probability of seeing a reversal. So it can see, or it can hit the boundary of the Ichimoku on Monday, then a reversal. It can hit the boundary of the Ichimoku on Tuesday, then a reversal. It can hit the boundary of the Ichimoku on Wednesday, then a reversal. Okay, but if it is holding on Monday just like this candle, or on Tuesday it is again holding, then there won't be any reversal. Okay, when it will hit the boundary of the Ichimoku, it will simply breach. It will breach heavily. Okay, it will mean there will be a very heavy movement, and it will be able to breach the Ichimoku through that the heavy candle. Okay, so as of now, let's keep it simple. Number one, on Monday, gap down open, immediately upon open it will come down. Secondly, irrespective of the open, it will come down. Whenever it comes down, it will find support at 4035, thereafter the support at 3990, thereafter the support at 3935 or 3937. Okay, thereafter it can see a reversal, or it will remain there, okay, around that particular level. Now on Tuesday, if on Monday if there comes a heavy candle, then on Tuesday we can anticipate a reversal. If on Monday there comes this kind of candle, then on Tuesday we can anticipate a heavy candle, heavy bearish candle, or some good candle. Means again, so that candle on Tuesday will be bearish candle. Simple. In simple words, on Tuesday that will be a bearish candle. Simple. Okay. Then on Wednesday again, this is the downward movement, then again downward movement, and the downward movement. Any retrace is an opportunity. Any retrace will be an opportunity. Retrace, I do not say on hourly chart, on 15-minute chart. No, I say on the daily chart. If you see that the S&P 500 is giving you a retrace on the daily chart, and there is a good retrace like 4035, like 4065, 4110, that will be an opportunity to go bearish. That is the first scenario. The second scenario is that on Monday there comes a heavy fall, on Tuesday there comes a heavy fall. Whenever there comes this the back-to-back heavy fall on Monday and Tuesday, then either the Tuesday itself or on the Wednesday we will see a reversal from this level, a reversal. Okay, or from this level a reversal will be there. Definitely it will be there. Okay, so that is the second scenario. Other than these scenarios, okay, I do not see any other scenario in the picture. So guys, as of now, until the end of 2022, go bearish. Okay, and very soon, like within a week, like in the next week itself, we will see crossover in the moving averages, closing below the Ichimoku cloud, means 100% confirmed bearish through the technicals. Now guys, there is one more thing. I forgot to mention this thing, okay, in the beginning of the video, that you must not take this technical analysis as an advice to buy or sell in the stock market. You must not take this technical analysis as is to place your orders in the stock market. I give you the analysis based on the technicals. So this technical analysis is not a financial advice of any kind. You are requested to look into your things, all other things, then you can look into the technical analysis, my technical analysis, and then whatever you think, okay, whichever or whatever will be good for you, you can plan your trades and accordingly you can trade. So whether you are making 100% profit or 400% profit within a day, or you are seeing 20% losses or 50% losses within a day, those profits or losses are all yours. I have nothing to do with your profit or losses. Technical indicators work perfectly whenever the market is normal, whenever the index is normal, whenever everything is normal. Whenever things are manipulated, whenever manipulation comes into the picture, whenever there is very high probability, then what happens? Then the technicals do not work as expected, and that is the same thing that you have seen here. And that was the reason the S&P 500 was able to breach on 27th of July 2022. S&P 500 was able to breach the 4035. Earlier I told you very specifically, clearly, no matter what happens in the stock market, S&P 500 will not be able to breach the 4035 until and unless there comes a manipulation, because only and only the manipulation can override the technicals. And that was the reason. See, my technical analysis is very accurate, and this is what you are seeing for last many months, okay, or for more than a year. You are seeing that my technical analysis, it is very accurate. The only thing that the only times it is not that much accurate is when there comes a manipulation or the volatility. Okay, but this happens for a very limited period of time, but otherwise, okay, everything is good. Now guys, once again, if you want to get the S&P 500 daily analysis, means the daily analysis of the S&P 500, what is going to happen in the S&P 500 or in the stock or in the entire stock market on the daily basis, then you can join my YouTube membership, my YouTube community, and I will give you these video updates and the text notes on the daily basis, so that you can trade safely and you can make money and you can avoid falling into the traps. So I have given the link in the description and also in the comment section. Whenever you want to join, you are very welcome. So guys, and one more thing, if you have not subscribed to this channel, so you can subscribe the channel and you will get the timely notification. So click on the bell notifications also, so that you can get the timely notifications of the weekly technical analysis that I post every Saturday. And also you will get the informative videos like S&P 500 manipulation and the technical indicators. You will learn a lot of things. So do not forget to subscribe. Also guys, do not forget to like, share and comment. So guys, this was my S&P 500 technical analysis for the week of August 29th, 2022.